The S&P 500 is now at a very, very interesting level. If price holds at this level, we could see a bounce to the upside and a continuation of the bull trend the market has been in since 2009. However, if this level is broken, then we could potentially see further weakness to the downside and even potentially a bear trend such as the one that we saw in 2000 and 2008. So very, very interesting time in the market. So if you like today's video, guys, don't forget to like, subscribe, hit the bell notification. My name is Zahir Anwari. I'm the co-founder of SublimeTrading.io. We've helped hundreds of investors over the past 10 plus years learn to profit from the financial markets, learning our simple trend following methodology. I'm also a writer for a number of publications, including benzinga.com, and I'm regularly invited to guest speak on trend following and how exactly everyday people can take control of their finances and supercharge their stocks portfolio, particularly focusing on the next 3 to 5 years. So let's get straight into today's recording. So what you can see in front of you guys is a typical chart setup of mine. We're looking at the S&P 500. In the top left corner, we have the monthly time frame. In the top right corner, we have the weekly time frame. And down here across the bottom, we have the daily time frame. Now, what you can see is that I'm looking at the higher time frames, the monthly, the weekly, and the daily. What I'm not doing is looking at the intraday time frames, such as a 15-minute time frame, a 5-minute time frame, a 1-hour time frame. I can see the appeal to these lower time frames because ultimately it's about quick riches for a lot of people, but it's where a lot of money is lost and a lot of time is lost. By looking at the higher time frames, we can actually see a much clearer picture of what the market is doing, and then we can have a more investor approach. And this is where we do less to make more, where we simply hold our positions over weeks, months, even years, and see far more profit by ultimately doing as little work as possible. Now, remember, guys, also, most people are busy. You may have a job, a career, a business, married, kids, hobbies, etc. What you want is an approach to taking control of your finances, which you can adapt around your lifestyle and not have to compromise on time and profit. And that's where the higher time frames and trend following really come into their own for busy everyday people like us. So in the top left corner, guys, is the monthly time frame. So I'm just going to start on the monthly time frame. I like to work on the monthly time frame, then work down to the weekly and the daily time frame. So on the monthly time frame, what do I like to look for? Well, first of all, we can see that the S&P 500 is very clearly in this bull market. It's been in this bull run since its low point here in 2009. Since the start of the year, January, we've had a correction in the market. Now, that, again, this is not, if you look at the size of the correction in terms of the overall bull trend, the overall bull trend since 2009 has moved a whopping 610% roughly. However, the correction is only around 14% at the moment. So you can see it's a very small correction in relation to the overall bull trend that is in play. Now, the other points to note are this green line and this red line. This green line is the high of last year and this red line is the low of last year. Ideally, in a bull market, we want to see price trading above the high of last year. That's the calendar year. And in a bear market, we want to see price trading below the low of last year. At the moment, what we can see is that price is trading in between the high and the low of last year. So this correction is still trading between the annual levels of last year. So for now, this is just a pullback. You may in the market be reading about how we're in a bear market, how the market is crashing. There's often a lot of fear mongering. What you want is to be able to bulletproof yourself from that fear mongering and focus on what the charts are telling you, because ultimately the charts are a source of truth. We're looking at price action itself. Now, importantly, if I just expand the chart, what we can see is the month of May, last month, has formed an indecision candle. You may look at this as a doji or a spinning top. Ultimately, an indecision candle at a level of support. And the support level I'm talking about is the 4,000 round number. When we have an indecision candle at a level of support, what we potentially could see is an end to this correction and a move back to the upside. Now, how quickly that move to the upside happens is really down to the forces of the market. We are now entering the summer months, June, July, August, even into September. The markets tend to go into an area of consolidation. So that is something that we could see over the next 3 to 4 months, a sideways market before this move to the upside materializes. As long as price can hold above the 4,000 round number, then we're likely to see further strength to the upside. So that's the monthly time frame. Nothing to panic about just as yet. The fact that price is at this key level, this 4,000 round number, we're seeing some kind of support. This is a positive sign. We could see the market resume to the upside. Okay, now if we go to the weekly time frame, if I just open up the weekly time frame. Now, on the weekly time frame, we have a number of indicators. First of all, we've got this black line, which is the 200 simple moving average. It gives us the average of price over the last 200 weeks. We've also got the 50 simple moving average, which gives us the average of price over the last 50 weeks. In a bull market, we want to see price trading above both of these moving averages, and in a bear market, we want to see price trading below both of these moving averages. Currently, we can see price trading between the 50 and the 200 simple moving averages. This means that we are in nothing more than a pullback for now, a correction in the markets. Again, we can see a bit of this bounce in recent weeks, price trading above that 4,000 round number. Also notice that I have a trend filter. The bars aren't your standard red and green that you will notice or that you may associate with the charts. What we actually have are periods of green where the markets are bullish, we have periods of red where the markets are correcting or bearish, and we have periods of grey where there is indecision in the market. So currently what we're seeing is red and grey in the market, which reflects a period of indecision. It's not telling us that we are strictly in a bear market. This is why it's useful to have these indicators on the chart. Just a few indicators. You don't want to clutter your charts with a whole manner of different indicators. Just a few handful of very good indicators that can clearly tell us what kind of market conditions we are dealing with. So for now, the monthly time frame is inside the annual levels of last year. The weekly time frame is trading between the 50 and the 200 simple moving averages. The trend filter is alternating between red and grey, which says that we are in some kind of pullback, but nothing more than a correction for now. And if we go to the daily time frame, if I just open up the daily time frame, we can see that the daily time frame is below the 200 moving average. It's below the 50 simple moving average. It's above the 20 simple moving average, which is this blue line. And the trend filter is currently alternating between grey and green, telling us that we have some kind of bullish period or bullish momentum coming into the market. What we ideally want to see is price move back above the 200 moving average. The 200 moving average, guys, is a very, very important indicator. Old school traders used to draw charts by hand. They didn't have the luxury of software that we have today. So because charts were drawn by hand, they were very, very selective with the information that they put on their charts. The 200 simple moving average was one of the first indicators that they put on their charts because it was a proven indicator of the long-term trend. If price was above the 200 moving average, they would look for long opportunities. Below the 200 moving average, they would look for shorting opportunities. If I just compress the daily time frame again, what we have is the weekly is above the 200 moving average, but the daily is below the 200 moving average, right? Once again, the weekly is above the 200 moving average, the daily is below the 200 moving average. So what we don't have is alignment. We want the daily to be mirroring the weekly. So with the weekly being above the 200, we want the daily to also be above the 200 moving average. And then going back to the monthly time frame, we have price trading inside those annual levels. So overall, our stance, guys, is that we are bullish because the overall market is bullish. What we're seeing now in the market is nothing more than a pullback or a correction. And crucially, which is what today's video is all about, is the fact that price is finding support at that 4,000 round number. And over the coming weeks and months, we would like to see price hold above that 4,000 round number, work its way back to the upside, ideally break out and start printing new all-time highs. Once the S&P starts printing new all-time highs, then we are confident that the market has recovered and we are going to see further moves to the upside. Okay, so that's the S&P 500. But something that I want to bring to your attention, guys, is that even with the S&P 500 in this period of indecision, there are stocks that are outperforming the market. And this is really the foundation of a good investment portfolio, or a good investor, is being able to scan for and analyze and find and shortlist the stocks that are outperforming the market. Remember, the S&P 500 is an average of 500 stocks. So if you focus purely on the S&P 500, you will only get average results. The same with the NASDAQ, is an average of 100 stocks. So if you trade the NASDAQ, you'll get average results. The Dow Jones is an average of 30 stocks. You trade the Dow, you'll get an average return. What we want is to be savvier than that. We want to be able to filter and find and scan for stocks that are outperforming the markets. Here is a very, very good example. This is a ticker symbol MTDR, Matador Resources Company. It's a US stock. If I just open up the monthly time frame. Now, if you look at the price, it's trading above the high of last year. Compare that to the S&P 500. The S&P 500 is trading below the high of last year. MTDR is trading above the high of last year, and it's already moved 41%, 42% since breaking above the high of last year. So again, it's showing you how well this has performed despite the S&P 500 and the indices in general tanking. Now, if we go to the weekly time frame, price is above the 200 moving average, and it's above the 50 simple moving average. Compare that to the S&P 500. You can see the S&P 500, the trend filter is red and gray, and is between the two moving averages. Whereas with MTDR, the trend filter is green predominantly with bits of gray and above both moving averages. And also, if we come down to the daily time frame, on the daily time frame, price is above all three moving averages. The trend filter is green. Compare that to the S&P 500. The S&P 500 is below the 200 and the 50 simple moving averages. It's above the 20 simple moving average. The trend filter has only just turned green in recent days. However, compare that to MTDR and we have a much better looking daily time frame. So across the board, MTDR is a very interesting stock and one that should be on your watch list as it is outperforming the market. Okay, guys, once again, I hope you liked that video. Don't forget to like, subscribe, hit that bell notification for further videos that we will be putting up on a more regular basis. And also for weekly access to stocks that are outperforming the market, click on the link below in the description. Complete the scorecard, which will give you 30 days free access to the Hot Stocks Vault. What is the Hot Stocks Vault? It's where we share top performing stocks found through our proprietary scanning process, saving you time and money finding these stocks yourself. All right, guys, see you in the next video.